Okay, so I think we discussed quite a few topics here today. So in the next sort of 5 or 10 minutes, let's just look and stretch our minds a little bit and maybe look to the future. After all this sort of regulation has been imposed and after hopefully some of this technology around customization is imposed, what will the future bank look like? Martha?
I think there are potentially two scenarios, because let's put a scenario where you say, well, actually one potential for the future bank is that we really won't have branches anymore, where I don't have that concept of me going to the bank, where I have all kinds of opportunities to do things at home. I can have my video interaction the way we've just discussed it, but if I do have a situation where I might find it beneficial to talk to someone in person, or because, not me personally, but somebody is in the situation of being either with very complex needs and also with a reasonable amount of money at their disposal, why should they go to the branch? Why can't the branch come to them? That's what's happening in the Middle East today.
For some reason, whenever I think about banks in the future, I think of banks in space, but that's probably not going to happen in the next 10 years.
Is that where you'd like to shoot them or something?
But I do think, there's a serious risk for banks, which is that electronic finances can be passed around very easily these days. Then, the system has to be secure, but it doesn't have to be run by an organisation that's allowed to lend money or take deposits. I mean, it can be a fairly straightforward, although PayPal are now getting banking licenses, I admit, transaction networks, that can be done from a mobile phone network. There is a serious risk of disintermediation for banks in certain circumstances, and I think this could be aggravated by the current situation where the banks looking to now maximise profits and not lend money find that people look for cheaper solutions of where they can actually push their, where they can transfer funds, where they can get discounted rates. And if banks try and use this moment to retrench and pull in too much finance and hold it, then they could find that mobile phone networks and other networks like that actually start to leap ahead in the amount of trust customers have in them. So I think that's a serious risk.
And I think, related to that, I think where banks need to be moving a lot more is to a much more industrialized model, whereby you look at what is it that you as an institution actually do best, and which of those bits do you wish to continue doing, and which bits are being done by somebody else. At the moment, we've got the scenario where everybody wants a slice of the pie. The mobile company wants to own you, the bank wants to own you, the payment services provider wants to own you. They can't all own you.
I mean, the products they offer are very commoditised. A mortgage is a mortgage, a credit card is a credit card. The only two things that you have to compete on are risk management and cost. And banks do have to start looking at how they can reduce cost, primarily through automation. And they have to start looking at better risk management. And again, that's going to involve better systems, increasing use of things like high-performance computing, grid systems to measure risk more accurately. That requires investment in technology. So I certainly think technology spend should be going up, even if it's going to be going down over the next 12 months.
We've talked about the supermarkets becoming banks. And we've talked about, well, someone showed the illustration of BT issuing its own credit cards. I think, just like you can have virtual mobile operators, you could have a situation where the mobile networks take over more of the banking than the banks currently do. Particularly since SIM cards, for example, is probably one of the most secure cards you're wandering around with in your wallet. Well, not in your wallet, on your person.
Yeah.
I think to answer here, the first one, from a branch perspective, the good news is that all the technology is there to transform the branches and to make it more efficient. The biggest problem is the cost of the transformation, the business case. Because there are not enough sales into the branches today, the business case for a radical transformation of the branch is rather low. So I think that banks need to look seriously at all technologies like virtualization in order to take the technology footprint out of the branch and centralize it so that the management of it will be simpler, more cost effective. the deployment of new application to the branch would be faster time to market new products and services. At the same time, the economies that could be made in the branches could be used to fuel innovation. Innovation in the way you train remotely your bank employee to become more salespeople, and then turning the number of sales. I think the studies have shown that out of 100 visits a day into a branch, only 2% get out of the branch with new products. So a slight increase in this would change the P&L of the branches. The other element is how to get the trust back of the customer, traditional customer and the new generation. Here again, better training of the employees so that they are not concentrated on their PC and the bad performing application, but are focusing on the customer, listening to customer, proposing the right product, and at the same time, telepresence technology so that we can share real experts among a number of branches, so that the customer never leaves the branch without the information he or she is looking for. And all of this is, from a technology point of view, possible. What's difficult to do is to build a business case. But I think that companies like HP can help there.
Jens-Henrik, one final word from you?
Yeah, and I agree with all the comments that were made on this. And I think that what is happening is that all the transactions, they are being much more automated. It's going to be online. It's going to be from your home, et cetera, et cetera. And I think the branches, they are moving into becoming sales centers or sales branches where the people in the branches, they will be spending their time selling products to their customers, and where you go in and you get advice. And I think we'll see financial products being sold in areas where we haven't imagined before, social networks, et cetera, and with different types of electronic means which we probably haven't even foreseen today. So I think transactions is going to be much more automated, electronic, et cetera, and we will see these financial services in areas where we probably haven't even imagined they would be.
Excellent. Well, on behalf of HP, I'd like to thank everybody for visiting the Retail Banking Innovation Centre here today, and thank you all for your time.
Thank you.
Thank you.